folks, welcome back to the channel. So I just released a new article on my Substack, and it's basically all about exploring new opportunities, and I'm going to cover that in this video today as well. Firstly, as I mentioned in the last video, May does mark tax harvesting season, and this kind of aligns with generally sucking out liquidity from the general markets. And that's probably why we saw the miners performing quite badly, just because miners and actually across all equity classes, cryptos and stocks saw a quite heavy decline. As we'll see here, the best performing miner from the ones I'm tracking was Iris Energy, and it was only down 8%. And the one that was down the most was CleanSpark and Riot, I believe, which were around 25% down, and Cypher as well. But I guess a lot of people may be thinking they're like kind of fearing the halving event that just went and passed. But we saw Bitcoin miners do extremely well on Friday. And then once market closed and yesterday, we saw the halving take place, and we also saw something quite exceptional, I guess. Basically, if you're not aware, there is a new protocol on Bitcoin. It's called this Runes protocol. And somehow I was also airdropped this runestone. But basically, if you hold this runestone, you will be airdropped this kind of meme coin. So this runes, basically, what they are is basically meme coins on Bitcoin. And because of that, I guess some people, degens, were really trying to get that low edge number, etc. So they were really paying up for it. And as you can see, the average mining fee was around 18 Bitcoin. So for one transaction, they were getting, actually not one transaction, but solving one block, they were getting 18 Bitcoin, which is crazy to think that just for one block, miners were getting so much. So the miners at the moment are actually printing a lot of money. And the meme coins really do take off on Bitcoin. Expect the miners to rake in a lot on transaction fees alone. To sum this up, if you are thinking about getting into the Bitcoin miners and you did not get in previously, I think now is a great opportunity. Not investing advice, but that's just my personal opinion. I personally will not be allocating more to the miners, just because 50% of my long-term portfolio is in these miners. And then also I'll give you a sneak preview. Yeah, I have my full trading account here. Is all in the miners. You see, I'm just doing cash secure puts on the miners. And check out this one. I just want to highlight this. So I had this one on CleanSpark, a cash secure put at 1650. The price closed at 1720. Was on Friday. Basically, I didn't get assigned this, and I got paid basically $630 to kind of ensure that. And because I didn't get this assigned to me, and I was thinking, man, this would be a great time to pick this up. It's declined. I can start selling covered calls on it. I just turned around and put on another cash secure put on CleanSpark just for 50 cents lower. But check out the premium, $1.65. $1.65, and my break even would be $14.35 if I get assigned it, which I'm happy to. And if I don't get assigned it, I basically earn $1,100 at 11% premium on the capital I'm deploying. So that's crazy, but that's going well. So shifting gears, So you'll probably know that gold and commodities have been skyrocketing. Here we have gold and here we have silver. And another one is tin. Tin just absolutely on a tear. But the way to play this is basically, again, through miners, just like the Bitcoin miners, but this time it's the gold miners or tin miners, I guess. But the problem with the miners really is what I've learned with the uranium when we went through the whole uranium thesis, and even with the Bitcoin miners, like take Riot as a prime example, that it's really, really difficult investing in miners because there's so many operational risks. Really, there's dubious management practices, even like CleanSpark, like the management selling at the top and then introducing additional share, what do you call it, selling shares and raising like private placements, etc. And while they all sell at the peak. And the dilution is just crazy. Given the fact most of these commodity prices were really rock bottom levels, none of these companies are actually making money. And I know the whole idea is that you're trying to get them at that turning point, at that afflicting point, but it's really so hard. And like, just take a look at like Global Atomic. This is in a uranium bull market. Like, from the peak, I know this is just one thing, right? Jurisdictional risk. Global Atomic, one of the best deposits, uranium deposits, is trading at only $2.05 Canadian, and its peak in 2022 alone was $5. That's in a uranium bull market. And the other one I used to follow, GoviEx, a huge deposit, again in Niger. They're basically trading at the same level they were trading around the COVID throws. This is a uranium stock with a huge deposit, a uranium miner in a uranium bull market. And even something like, let's say, I don't know, Fission. I know you could say Cameco, etc., but, let's just say what it is. Yeah, this is Fission. They have a huge deposit as well, a tier 1 deposit, I believe, in Canada. Really, the stock price, unless you just like timed it magically in the COVID lows, really has done nothing. Imagine you bought in 2019 or 18. Yeah. What did you make? You just barely made a double. So I really don't want to go into the miners. And for that reason, I'm just going to let these gold, silver just play out. Maybe I'll take some ETFs, the ETFs, and look at some covered calls on them, etc. Yeah, so as you know, I'm hugely bullish on the offshore sector, and that's probably where I'm going to focus on. At the moment, my holdings really are just a core position of Rig, Val, and Tidewater. And the next one I'm actually looking at is at Borr Drilling. So Borr Drilling is kind of interesting because the stock price has taken quite a hit lately. It's doing pretty well, and recently, given the suspension of the jackups from Saudi Arabia, really put some downward pressure on the stock price. If I can get it up. Yeah, so you can see it peaked at around, let me zoom in there. Yeah, so it's down. How much is it down from the peak? It's down around 40% from the peak, given the suspension of rigs from Saudi Arabia. But this is kind of interesting that these were extremely low rates. So this was like around 100K a day. So actually they lost this, but then straight away they actually signed 3 additional new contracts. And if we go to their presentation here, you can see that actually the rates are improving a lot. Now you can see into 2023 the average day rate was 161K, whereas these Saudi ones were only getting 100K for them. And then they turned around exactly and signed 3 more contracts at a higher day rate, which a little bit disappointing seeing the performance of the stock. I thought it would really rally off that news, but it did not. So that's interesting. But to me, this is not really that much of a issue, just because it's really Saudis or the Middle East is not a premium sector for the jackups. I think they get a lot more contracted rates at in, I think it's the Gulf of Thailand and West Africa, Asia, and Mexico. I think those are the ones that they really get some good premiums for in the jackup market. And we can also see that the revenue is climbing, so they are actually generating income. So they're actually making money in this current status quo of the market. Yeah, utilization is on the rise. I think utilization may take a hit because there was additional suspension of 5 rigs in Middle East again, which may damper some utilization. But in my opinion, I think this is just a stumbling block, a roadblock towards higher rates. I think it's just going to take some time working it out. So I don't pay too much attention to that, to be honest, just because, look, Saudis suspended the rig. I think it was 1 rig. And then they signed 3 contracts for 3 new rigs jackups, sorry. So I don't really have too much problems there with them. And they will get a higher rate. So I think Borr will do quite well. And Of course, I dived a little bit deeper into it in this Substack, which you can go check out and read. This is just like an overview of it. But at the moment, I have not pulled the trigger on Boar, just because I'm considering, do I level this up or do I just funnel more cash into Rig? And now Rig has been extremely volatile, and yeah, it was peaking around 684 and it's again dropped to 550 mark. So yeah, I think Rig will do the best out of all of them, although there's a lot of risks there. So I'm really debating between picking up Boar or just putting more money into Rig and Valaris, as we also know Valaris has some jackups. But really, if you're looking for a pure play flower, I think you cannot go wrong with Boar. And yeah, check out this article if you want further information on it. Yeah, and we'll cover my trading portfolio next time. It's going pretty well, kind of happy. So far this year has, well, we'll cover that in the next video. Okay, thanks folks.